The rally in Dash does not seem to stop. The rest of the market is going down, yet Dash has almost 3x'd in the last week. The question is why? Who's buying here? Who's selling here? And how much longer can this rally last? Let's have a look at the potential upside and let's try to figure out whether or not it still makes sense to buy into Dash. Now, we've already talked about the Dash 2 days ago, and that video got slightly above average views. That was when the price was still $71, but a lot has changed just within 2 days. We are currently at $139. Now have a look at this long-term market cap chart. Dash peaked out at around 12 billion. That was at the peak of the ICO bubble, which lasted up until the end of 2017. Then came the crypto winter, then came a revival where Dash reached 4.5 billion, then again another depression, and we are getting back up again. Can we reach the 4 billion or maybe even the 12 billion again? Currently, we are at 1.5 billion. Really, it's important to look at altcoins not in isolation, not just via this US dollar chart, but to see how is an asset doing relative to the rest of the market, relative to Bitcoin, for example. Because there's all of this correlation within crypto. When Bitcoin is going up, most altcoins go up as well. When Bitcoin is going down, most altcoins go down as well. Because once we do the comparison to Bitcoin, we are getting a very different chart. Yes, we do have our rally up until 2018, but the secondary rally, this pump over here at the beginning of 2021, it can't really be seen in the relative valuation chart to Bitcoin. In other words, all of this here was just caused by the general macro environment being bullish. Dash did not outperform Bitcoin during that time. Really, the peak was already in March of 2017. And since then, Dash underperformed Bitcoin by 99.8%. A complete capital destruction. But now we've got our rally and things seem to be turning around again. What we're seeing over here is the chart of Dash relative to the others. Others is a measure of the altcoins that are not in the top 10. Dash is included in that. So it's not just that the altcoins in general had a hard time. Dash did much worse than the average alt. Now, the current rally of roughly 800% outperformance. We have seen something similar at the very beginning. Usually Dash tended to underperform over the years, but there was this one initial rally that was similar in magnitude. And so let's compare those two periods. How much higher could Dash go if history was to repeat itself? The answer is not really that much more. When something goes up quickly, it can, after a while, also crash very quickly again. In the past, it took 1.5 months until the crash, which was 80%. So Dash has always been volatile, unfortunately, mainly to the downside most of the time. But the privacy narrative that started off with the rally in Zcash also now moved over to Dash. What's fascinating is always where the buying pressure is coming from. Because if it's mainly the spot market, that means people are buying Dash just to hold it very long term. At least that's the tendency. If people buy Dash, however, with bets on the price, with leverage via the perpetual futures, that means that it's rather short-term capital that's pushing up the price. Because perpetual futures are great for getting in and out of assets. They've got a lot of liquidity, they've got very small transaction fees, but they're not that great for holding an asset long-term because there are quite high financing costs associated with perps. Now, the trading volume in the last 24 hours was 291 million on Binance on the spot market. But on the perpetual futures market, we had way more than that, 1.2 billion of trading volume. There is roughly 4 times more trading volume on the perps compared to the spot market. So really, we have to look at what the perps are doing. Or in other words, we have to see what Binance is doing. Binance is dominating the perp trading volume. And here's the interesting development. The vast majority of perpetual futures traders are currently betting on falling prices of Dash. Now, this can have 2 reasons. It could either have the reason that now everybody is looking at the price, thinks that this is totally inflated, that the price will come down because simply just a lot of people enter now short positions. Or it could be that there have been simply a lot of liquidations and that creates an imbalance in the market. Because the balanced funding rate for most cryptocurrencies most of the time is positive. And have a look at those liquidations. This is all short liquidations. So many people lost their money by betting on falling prices of Dash. And when the funding rate is negative, that's an incentive for the market makers to buy up the token on the spot market to liquidate all of those shorts. My impression is that this is a classical short squeeze. A short squeeze that happened in several stages, because when we zoom into this rally here, then we've got the hourly chart. A first short squeeze, another short squeeze, and here is now short squeeze number 3. It appeared as if betting on falling prices of Dash was a quite safe medium-term trade. But many people got wrecked. Once the market cap of an asset is just a few $100 million, it's very easy to manipulate the price, to push it higher. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Just have a look at the trading volume in US dollars, not in Dash tokens, but in US dollars in the last 24 hours. It's historically high. It's much higher than the spot price would justify. So really, there's a lot going on. People are getting pushed out of the market with that volatility. And so again, there are currently more short positions than long positions. And this is growing further and further. The open interest, so the amount of bets on the Dash price, is also at an all-time high. And so as long as the funding rate stays negative, there is more incentive to push the price higher, and the open interest could rise even further. So this is a game where the market makers fight against the retail investor. The retail investor is betting on falling prices and the market makers push up the price. And the question is, who's going to give up first? It's quite similar to what happened with GameStop, right? Just the other way around. With GameStop, it was the market makers or the hedge funds that bet on falling prices. It was retail that bought up GME. This time it's the other way around. It's retail that tended to bet on falling prices of Dash, and now the market makers pushing up the price. At some point, this will of course unwind. And I think this will happen when the last short got liquidated and when the funding rate normalizes again, and when then the open interest starts to decline again. That's then also when the Dash price can come down, right? Just have a look at how much correlation there is between the price and the open interest. The more bets there are on a certain asset, the higher the price is going. Once attention goes to the next token, open interest comes down and the spot price comes down with it. There's always the risk of a secondary short squeeze. For example here, right, with Dogecoin, we had our massive rally and subsequently a decline in the price and a secondary squeeze. Or over here, we had a rally, a decline, a secondary squeeze. And this also happens on smaller time frames, right? This is the daily chart. Again, we rally, we slightly decline, we rally again. And something similar could happen for Dash in the current situation still. We have seen several short squeezes already, but still the funding rate is negative. Still, the open interest is extremely high. So we might see just another squeeze. We have seen market caps of Dash above 10 billion. Are we going to hit the 10 billion? Probably not. Could we hit 2, 3, and 4 billion? That's definitely possible. So Dash at $2, $3, or even $400 is definitely possible during this rally. It will not be a sustained price. This is not something that's just caused by usage of the blockchain. This is simply just speculation, where the short investors play against the market makers. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance, into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends this over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest, issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stable coins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk-on volatile cryptos and from volatile cryptos back into risk-off stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices. And that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we're getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stable coins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much, much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. Then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors, and that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61% ApeCoin. And this is much more in line with this picture over here, right? Charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well. This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back no questions asked. Now I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time Bitcoin lost 9%. Now unfortunately this capital pool is already closed, but if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member, but if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.